Good morning. It's Market Day Report. Welcome to a Friday. Well, we've got a short trading week coming up next week, and we'll talk more about that a little later today. But right now, let's look at how markets traded in the overnight session. We'll start with the corn market. And corn overnight in the red. December, penny and a half lower, $4.39 a bushel. Soybean trade moving higher in the overnight session, 10.29 and a half, 2 1/4 higher. Now, beans have been lower during the day session for the past 2 sessions. Wheat market, well, how about Chicago first, up 4 1/4, 5.30 3/4 in the overnight trade. Hard red winter, 2 1/2 higher, 5.25 1/4. And spring wheat, sometimes we call it Minneapolis, and the December is the new crop. Penny and a half higher, 6.50 1/4. As we open that trade up today, will it be 3 consecutive trades higher? Now to the cotton market. Cotton has really struggled, been down 3 consecutive sessions, and 67.40 in the overnight, losing 7 points. So what's going on with the markets? President, Midwest Market Solutions is Brian Hoops. Hi, Brian. As we start the day, you and I actually exchanged a couple of texts last night because something interesting was happening on the other side of the earth.
Yeah, it certainly was, Tony. No shortage of news to trade upon this morning. Of course, last night, the biggest news is Israel's attack on Iran. Several bombs had hit certain facilities, maybe some nuclear facilities. There was at least 4 very important scientists, generals that were killed in that strike. Iran has tried to retaliate overnight, but the drones that they sent were all shot down or beaten back. And the markets just really spiked last night. We're talking about crude oil markets surging higher at one point in the overnight session. Now things calmed down during the night session, and we're still seeing some fairly large swings, but the market is trading way off of its overnight highs and way off of its lows, kind of middle of the range. It also produced a lot of selling in the stock market. The fear is oil supply will be disrupted out of the Middle East. And so it sent oil prices sharply higher. That's a little bit supportive to some of the grain markets, maybe the corn market in here. Of course, disruptions in the Middle East. You think about wheat, maybe would also be disrupted. So there's some concerns about supplies of some of the other markets as well as crude oil. But certainly the stock market, we're feeling fears about inflation with crude oil prices the highest levels of the year. Gas prices would go up. That would hurt the U.S. economy because of inflationary concerns, and it's something that certainly is going to impact our trade during the session today. Now, if you look at just weather here in the United States, and that's what we normally would be trading off of, it looks pretty bearish for corn and soybeans. So likely you would see some selling pressure come into those markets as the growing season right in front of us in here, and it's good growing conditions that we're experiencing.
Yeah, Brian, you mentioned crude. Let's go to the crude market right now. And again, trading at some pretty elevated levels, backing off of that 77 we saw earlier, but 5.30 higher at 73.34. And we look at it on the chart action, which goes back to what you were just talking about, and look at that spike back up that we haven't really seen since mid-January. And here's what it looks like over a 5-day window as well. We'll be talking about that throughout the morning. But how about we take a break, come back and talk livestock futures. Market Day Report continues in a moment. Well, hope you are not suffering from triskaidekaphobia, and we'll tell you why in just a moment. How about cash cattle? And so far this week, we started early in Texas at 235, worked our way up to 240 across Kansas, and that's where we are in the south. In the north, mainly 242 and dressed at 380. So we don't trade in the overnight session. This is how we finished the session yesterday. 42 higher on the front month for live cattle. June contract at 228.25. August $1.05 lower, 216.97. Feeders in trade yesterday, making it 2 consecutive days lower, exception there being the August front month contract. And really, live cattle has settled in the red 3 consecutive sessions if you take that front month June out of the equation. And you look at hogs, and hogs, this is one of those markets that's been higher, lower, higher, lower. June added 25 cents yesterday, but July and August both taking 2 and 10 cents off of the table. What's happening? Well, Brian Hoops, Midwest Market Solutions. I think live cattle is trying to chase cash.
They're trying to, yeah. June contract really is still too heavily discount to the cash markets. We've been trading higher most of the week, but it's not enough to catch up to that cash trade that you referenced. It was pretty much steady with the prior week, and that's why we've seen a little bit of profit taking in some of the August, October, December contracts, but not a lot of outright selling. The feedlots just really don't have a lot of interest in hedging those deferred contracts because it's hedging at a loss and it's a steep discount to where the current cash markets are. So you really have to believe the cash markets are going to fall, and the futures hedge doesn't help you if that cash market does fall like that. So um, slaughter pace is down this week considerably from last week by over 21,000 head so far. Compared to a year ago, it's over 36,000 head so far this week. That has helped our boxes improve. And so we've been steady to higher for most of the week in the box beef. That's helped the packer margins recover just a little bit because they have a little bit more margin to work with without paying that higher cash trade. So that's a good sign, as well as steer weights that fell last week by about 4 pounds. They're still heavier than a year ago, but those weights did come down a little bit in the last week. So some encouraging signs from a fundamental standpoint, but yet really nothing has changed. Supplies are tight and will remain tight here. It's just a sign, just a question of how long will consumer demand hold up at these price levels.
Yeah, good insight there. Thanks, Brian. Brian Hoops, Midwest Market Solutions here on a Friday. Hope you don't suffer from triskaidectophobia.